Thank you for joining us.
Get my other. Uh, oh, thanks for having me. It's great to talk to you again.
Yeah, it's been a while. I always start by sort of remembering and reminiscing when I first met the various guests that we bring on, and I think it was, gosh, around 2010. Ellen and I both went down to Florida and had a sort of a multi-day meeting with Hazel Henderson in her living room and pool, and it was an amazing gathering, an amazing group of people, and I remember, and I'm not just saying this to make you feel good, Ellen. I remember we just met, and I was like, wow, this lady's really smart. She knows more about money and banking than I do, and I worked in banking for 20 years, and so I've been following your work ever since, and very intrigued with, in particular, your work on public banking, which is sort of a radical idea in the United States, at least. And but we'll get into that. And so anyway, mostly just welcome back. And I also had no idea how many books you've written, and I'm about to publish my first real book on my own, all by myself. Holy smokes, that's a lot of work. So congratulations on that as well.
Thanks. Yeah, I used to only write books, so I mean, we were in the Foreign Service for, well, I mean, I'm divorced now, but at the time it was like 12 years overseas. And,
You had a lot of time to write books.
yeah, yeah,
Yeah.
that's what I
Well, you're
did.
still a prolific writer, and um, most recently did a piece just hot off the press on the Genius Act, which we'll get to as well. But before we go there, maybe just for everyone's sake, let's just sort of get grounded in your philosophy about money and about banking, which is it's a little bit radical. It's quite refreshing, and one of the things it did for me is it caused me to start questioning, why do we just assume that banking is a private sector activity, and that money is, well, money. Maybe I'd start by saying, I don't begin to understand money, and so this is as much me learning as anything else. But let's start with your work in public banking and why you're so passionate about that idea.
Okay, and I want to know what you don't understand because I imagine you do.
I
But
can
anyway,
explain derivatives, but not money. Put it that way.
you can explain derivatives? Do
Yeah.
tell. That's something I'm afraid it's a little over my head. Well, I would say everything should be public, that, public utilities should be things that we all use that join us together. And it's just like water. I mean, water is no longer a public utility, but it really, I mean, it's been being privatized different places. So, but basically water, communications, money, these are all things that flow between people. And we're using the US dollar, obviously, which theoretically the government has the power to issue, although it's delegated that power to the Federal Reserve. And even the Fed does not create the dollars that we spend. The Fed only creates reserves, which go into the banks. So the banks have an account with the Fed, and we have an account with the bank. And then the bank will create money on its books. I mean, create it as loans. So all of our money is basically debt based. It comes from somebody's loan. Like even your employer probably took out a loan to, where did your employer get the money to pay you? You've worked for your money and you say, no, no, I didn't borrow it. I got it. It was paid to me. But where did that money come from? Somebody took out a loan at some point to get it out of the bank. Um, and so it seems like all that should be, that infrastructure should be public, because right now you've got these middlemen that are siphoning off fees and interest, etc. Um, Whereas if we were public, our one model is the Bank of North Dakota. If we didn't have them, we wouldn't have any model in the US. Although in China, I mean, China has a brilliant public banking system, really. I think
Mm.
we should copy China in many respects. I mean, not in there. I mean, we definitely have more. We have the Constitution and Bill of Rights, and we have more freedoms in general. But their financial system is really good. I mean, how did they create all that infrastructure in a mere 40 years. They've
Mm.
built enough high-speed rail to go around the world. I mean, like literally over 25,000 miles of
Yeah,
high-speed rail, and funded all the Belt and Road. But we can get into that. They actually funded Belt and Road with dollars,
with dollars.
US
Yeah.
dollars
But
in
a
the,
critic would say, yeah, but their banking system is probably bankrupt and, effectively being bailed out by the government on an ongoing basis, and all their real estate loans are underwater, blah, blah, blah. How would you respond to that?
yeah, well, those are the local banks, which is, well, agreed, there's that. And we have the
Yeah,
same problem. I mean, I keep saying
yeah,
that expect all your small banks to go bust because they all have all these underwater, there's a word for it anyway, but they, they've got assets that aren't worth at
yeah,
all what they say they're worth. So we've
yeah,
got the same problem, but
yeah,
it's good to have, I would think, to have a central bank that can back you up. And that's what keeps them all
yeah.
afloat. And that's what, keeps our system afloat.
But as I understand your argument, and again, for those, probably half of you listening are from outside the United States, so the context is a little different. But in the United States, there is one example of a state chartered bank, the Bank of
North
North Dakota,
Dakota.
not South Dakota.
Yeah.
Um, and it arose out of a need for a public need for a bank to essentially support the infrastructure needs of agriculture in North Dakota. And it wasn't put together by a bunch of socialists or communists. It was put together by business interests. And Ellen's been working for decades now trying to show the success of that bank and bring state banking legislation to, the other 49 states. But as I understand your argument, it's not that you think there should be no private banks. It's just that you think there should be a complementary public system to, in a sense, fill in the holes that the private sector doesn't naturally want to flow to. Is that a fair?
Well, the idea of public banks, or our idea anyway, or the Bank of North Dakota, is that it holds the state's deposits. So that's our public deposits, our public money. And a city bank would do the same thing, a state or, a publicly owned city bank. So the Bank of North Dakota holds the state's deposits. It creates loans just like private banks do. It's had a return on equity since 2000, like this whole century, of 20% compared to JP Morgan's of 12%. So it does actually better than your private bank that so you've if most states put their money in big Wall Street banks, of course, and thinking that they're safer there. And one reason is they require, like California requires 110% collateralization for their deposits. That's one problem we have with setting up a bank is that if we have to come up with 110% collateral, it sort of kills the use of the deposits. But
Mhm.
of course, they don't have that requirement in North Dakota. But when JP Morgan takes those deposits, they say it's collateralized, but they rehypothecate their collateral, which means they lend that same collateral over and over. So you don't
Mhm.
know for sure that you really have that collateral or not. Another thing
Mhm.
is that JP Morgan is subject to, I mean, they have 55 trillion or more, I don't know, in derivatives. And under the Bankruptcy Reform Act of 2005 and the UCC Sections 8 and 9 and the Dodd-Frank Act, they have super priority in bankruptcy, which means
Mhm.
they can take all the collateral. I mean, they can take their collateral before anyone else gets it. So even the secured creditors, which are the states, they think they're secured, their collateral is just not going to be there if the derivatives bubble bursts and it's
Mhm.
projected to be something nobody knows for sure, but something like $250 billion, or some people say $2 quadrillion. I mean, it's an
Whatever that means.
unbelievable amount of money that couldn't possibly, I mean, it's more money than there is in the world.
Yeah,
Yeah.
but those are misleading. That now we're in my wheelhouse, and
Yeah, go
those
ahead.
are those numbers are by analogy, it would be like adding up the size of a futures contract of futures exchange contracts, where the futures exchange's credit risk is really the change in value of the contracts, not the notional size of the contracts. But this is a rabbit hole we should reserve for another day. But I mean, I'm not suggesting that there's not a risk in the derivatives portfolios of banks and hedge funds. I've had a lot of personal experience with that back in the long-term capital days. But and maybe it sounds like that's going to be your candidate for the next financial crisis, perhaps when we finish up, but
Uh,
maybe not.
could be. Yeah. Well, it's bigger than the federal debt. I mean,
Yeah,
even if, yeah. Okay.
yeah. But let's there's a lot of just to sort of summarize the public banking debate, the there are a number of countries, well, the United States has some public banking entities, or quasi-public entities. But in many other countries, it's not unusual for there to be a public infrastructure bank or a public, in Germany, there's all the
Sarcasm.
Sparkassen banks. And for some reason, the United States has just always seen banking, with the exception of North Dakota, as a private sector activity. And I've always, since I met you and started thinking seriously about it, it's always struck me as odd that we think of it as a private sector activity, because unlike the automobile industry, it actually matters that the way the banking system works, and there's no way around having a healthy money and banking system to have a healthy economy. And somehow it seems like what we've allowed the banking system to do is get all of the benefits of, backstops and bailouts and subsidies, but then behave as if it's just a private sector activity that deserves big bonuses and um, big business opportunities. And so that's a huge topic, but let's leave that, since we only have an hour before we bring in
Yeah,
our,
and I will say that the Bank of North Dakota is not allowed to speculate or to
yeah,
do all those. And before we did have Glass-Steagall, which separated. Um,
yeah,
yeah. Anyway, we don't have that anymore. I mean,
yeah.
historically, there have been efforts to. We had a postal bank at one time, or the first U.S. bank and the second U.S. bank were basically public banks that were based on Hamilton's theory of public credit, that you should use public credit for infrastructure and development.
Mhm.
And then Jackson closed the banks down, and then you had that wildcat banking era. So then you
Which
had the
seems to be
private
coming
banks.
back.
Yeah, yeah. So now we have the wildcat stable coins.
Yeah, yeah.
Okay.
So let's switch to talk about, the news in the moment, which is deficits, both fiscal deficits, the big beautiful bill creating more deficits, our debt to GDP ratio well above 100, and our representatives, clamoring, and frankly, some very high profile financiers. Ray Dalio is founder of the largest hedge fund ever created. He's running around fear mongering about deficits and how the US is going to, I don't know if he says go bankrupt, but he's definitely very alarmist about what he calls the credit cycle. Um, and uh, and the other deficit that we're spending a lot of time talking about, of course, is our trade deficits and the whole tariff thing. So maybe let's start with the fiscal deficit, and going back to your book, The Web of Debt, best-selling book. What's your take? And by the way, I'm not sure we're going to agree on this, so we'll have a good dialogue. But What is your general take, starting at 30,000 feet with the US fiscal situation?
Well, right, we're 2 trillion or $1.9 trillion, I think, over budget deficit. So that's going to add to the federal debt. The federal debt is already almost $37 trillion. The interest on it is almost $1 trillion, which is like half the discretionary budget. I mean, interest is not discretionary, but it's equivalent to half the discretionary budget. And the Pentagon war military is equal to the other half of the discretionary budget. I mean, basically, we've eaten up the money that we have left for what people need and want by interest and military expenditures, both of which are, I think, I mean, the military has never been it's never passed an audit. Under
Yeah.
the Constitution, they're required to pass an audit, and somehow every year it's just assumed that we have to give them whatever they ask for. And we don't even look. It's one thing to say,
Mm.
okay, we'll cover your necessary expenses, but we want to see why they're necessary. Show us what
Right.
you're spending it on. Yeah, anyway, so there's that. But
Have
the
you done
interest,
any kind of investigation into that? You're putting your sleuth hat on as to why that's,
yeah. I actually wrote an article, but I haven't posted it. But yeah.
you're scared?
No, I sent it to, I sent it to SheerPost. They always post my articles first. And it turned out their editor fell and broke her shoulder. So
Oh,
I don't know. I had two articles that just kind of didn't
but
get
is
posted.
there a deep scandal as to why it's never been audited that is waiting to be unfolded?
Um, well, theoretically, these are military secrets. So you don't want to
I see.
reveal to your enemies what it is you're up to. But it seems to me you could say the number. You don't have to tell us the formula, or you
Yeah,
don't have to tell us how they built it, but you
yeah.
could say it's X amount for this aircraft or what. I mean,
That
I
sounds
don't
like a
know.
convenient excuse to me.
Yeah.
Yeah,
Well,
yeah,
and the problem is we've got, I mean, getting into woo-woo, there are rumors that there's collaboration with extraterrestrials. Who knows? Who
yeah,
knows who's running our military? We've got a secret government that
yeah,
is doing something, and we don't even know what they're doing with their
yeah.
money. I mean, Catherine Austin Fitts says they're funding all these tunnels that are underground that go all over the country, and these train systems that go through these tunnels. I mean, things that we don't know anything about. But so who
Mm,
knows? Because
mm.
we don't know what the money's going for. And she and um, a professor in Michigan State um, cataloged $21 trillion in missing revenues, 20 trillion of which were from the military, the rest is from HUD. And
Mm.
so
And
that's,
no talk about Doge and the military budget.
yeah.
Yeah,
I mean, I was looking forward to that. I thought,
yeah,
oh, good, we might get to see, but
yeah.
no, they never go
Well,
there.
so getting back to our deficit, so I would say you're arguing the Ray Dalio argument, which is that the interest is now growing in a sense faster than the economy, and so it's sort of a runaway train. And
Mhm.
as you know, I'm a fan of modern monetary theory, and as
Okay.
you know very well, those folks would argue that that's the wrong way to think about it. They would essentially say we've got it backwards. And for those that aren't familiar with it, just really briefly, because this is a whole separate conversation, and I'm not an expert in this at all, but I was just to sort of put it into context. When I learned about modern monetary theory, it was particularly poignant because I used to do business with the guy who kind of invented this when I was in Tokyo, who's a very sophisticated financial markets professional. And he just always had a very refreshing, counterintuitive, counter-conventional way of thinking about financial markets. And he essentially, his name is Warren Mosler, and he essentially is explaining that this is not some kind of theoretical idea. It's actually the mechanics, like the plumbing of how federal government spending works. And the gist of it is that we don't actually tax the public and then take that money and spend it. The government actually spends money on whatever it decides to spend money on, and then taxes the public separately to drain the money back out of the economy. But that the constraint on a government, and it's important qualifier, a government that has its own currency, the constraint is really not balancing the books the way it is for an individual or an individual business. The constraint is whether there's slack resources in the economy, in particular labor, people willing to work. And as long as you don't press the employment into an inflationary situation, there's essentially no limit on what, for example, the US or the Japanese government could do in terms of spending. And so it goes counter to the whole deficit problem. And you're smarter about money and deficits than me. So why is that not correct in your mind?
Okay, well, for one thing, the Treasury or the government is not allowed to spend. They bank with the Fed. And the money has to be in their account before they spend it. That's the law. They cannot do an overdraft with the Fed. The Fed cannot borrow or cannot buy Treasury securities directly. They have to buy them on the open market. If they do buy it on the open market, they buy it from somebody who's selling bonds, and they pay with reserves. They don't pay with dollars. They pay with reserves. The reserves go to the bank of the seller.
Hang on one second. Let me go back for a second. So let's say we pass a budget and we say we're going to spend $1 trillion on the military. And the first order of business is we're going to buy 10 jets from Lockheed. And so the government issues a purchase order for 10 jets. I assume the government does that, right? Some some
I assume I
some agency of the
made there,
government.
right?
So where does that money come from that goes to Lockheed? I
Well,
don't know.
it has to be in the Federal Reserve account before they can spend it. I mean, it says that right on the Federal Reserve website. Uh, so either it
So it
comes,
has to be in the government's Federal Reserve account?
yes,
Yeah.
yes,
Okay.
the Treasury's account, whatever
Treasury.
it's
Yeah.
called, the
Yeah.
TGA, whatever that is.
Yeah.
So it has to be there. So it's either comes from taxes or they're going to have to issue some bonds. I mean, they put the money that they get from the bonds into that account. Um, they can't do an overdraft on that account. They're not allowed to spend what they don't have. So it's got to be there first. And
Hmm.
uh, if they when they buy bonds, or sorry, when the Fed buys bonds, it buys with reserves, which go to the bank of the seller, and then the bank will credit the seller's account with dollars that they can spend in the economy. But the reserves go into the bank's reserve account, and the Fed is currently paying, I think it was 5.5%. I'm not sure
Hmm.
it's it's that now, but anyway, and they're getting 3.3% on the interest on the bonds.
So, but
So
that reserve interest rate though is a manipulated. It's a they can make it to zero tomorrow if they wanted to, right? I mean, it's like a
yes,
money market. It's like it's a different. It's not the Fed rate, but it's like the Fed rate that the central bank sets.
well, it is. I mean, I think it is the Fed. It's the Fed funds rate.
Is it the Fed funds rate?
That's
Okay. So, but I mean, they that's not a market determined rate. That's a
true, but
we'll
the
pay what we
reason they
want to
don't
pay.
want to put it back to zero is that we'll have the same thing that happened before, where you have um, all sorts of borrowers speculating with the money, borrowing at 0%. I mean, just like they do with the Japanese carry trade, where
Yeah.
you borrow at
Yeah.
zero, buy all this speculative stuff, buy assets, drive up the asset prices.
Yeah.
So the Fed is currently worried about inflation. I mean, I would argue it's about time they lowered the rate. I think
Really.
they
You and
could
Trump are
lower,
in
but they
agreement on
haven't.
that?
Yeah, yeah. But anyway, but that's what they're doing. So agreed. I mean, I think it's the
But
treasury that
couldn't they put the reserve rate at zero, just to, for argument's sake, without moving the Fed funds rate? I mean, they can do whatever they want, I think.
Um, I don't, they set a repo rate and it's high and they set it high just so that the repo market won't go below that rate. They're trying to manipulate the rates. Um,
But anyway, the
apparently,
reason this matters is your argument is that because of the fact that they pay interest on reserves, the modern monetary theory doesn't account for
well,
that
it's
money.
not going to get rid of the interest. The interest is still going to go to the Fed, right? And the Fed is losing money on the interest because they're paying out more than they're taking in. And we used to get the Treasury used to get the interest, used to get the different, they used to get the profits of the Fed after they deducted their costs. And it was a lot of money. I guess Scott Bessent said we're losing like $1 trillion a year or something. I could be wrong. I forget. 100, I forget the number. But anyway, we're losing a lot of money a year. Maybe it was 100 billion. I could be wrong. Sorry. Anyway, we're
Yeah.
losing I think it was one year it was 114 billion. That was 2013, as I recall.
Yeah.
So so
But again,
because
the Fed, like I remember when, when interest rates were just going higher and higher and higher, after the Fed had bought all these treasuries and mortgages to bail out the market, the mark to market, if they were any other bank, the loss on those would have been trillions. But they never have to actually, they can fund themselves indefinitely. Um,
okay, but they're spending reserves. They're not spending dollars. And I mean, they put that law in there that the Treasury can't borrow directly from the Fed because they don't want the Treasury to just run up,
I
or
see.
they don't want Congress to run up a huge thing. But anyway, I would say that I agree the government should be printing the money, but the government is actually Congress. That's what it says in the
Yeah,
Constitution. Congress shall have the power. They delegated that to the Fed, which is owned by the banks, and so they look after the banks, and they don't have any problem with bank speculation. In fact, they got rid of the
yeah,
law that didn't let the banks speculate with our
right,
deposits, et cetera. So better would be if it were the Treasury, which is what
right.
happened in the the 1860s.
So that's the greenback, the Lincoln story, which I've
Yeah, yeah. So to
no
let the
idea. So tell
Treasury
that
do it,
story.
you're still going to have the problem of if you give it to the Treasury, you're still going to have the problem that they can print whatever they want. So a runaway Congress could be spending on all sorts of things we don't approve of. So you need to set up some laws. And ideally, you would say if it's own, it has to be spent on productive things. As long as you add to GDP, it's okay you can increase the money supply and demand, increase demand as long as you increase supply. So if that demand is going into building stuff, producing stuff, then it's a wash and it's fine. You can do it. So anyway, you'd have to set up some laws so that Congress would not do what everybody's worried about is a bunch of pork and all that. Yeah.
Right.
But that it's the same under MMT. Either way, you've got that problem that you're gonna have to curb the spending somehow.
Yeah, although the MMT folks, they would probably say that, yeah, we don't like the corrupt pork in the budget, but as long as it doesn't create inflation, they would argue it doesn't really matter. It's corrupt, but it doesn't. The reason it would matter is if it generated inflation, and that would be that I know is their kind of primary. I mean, their basic premise is we should have government spending whatever is needed to create full employment. And when there's full employment, then they have to either take money out of the system through taxes or constrain their additional spending so they don't create inflation. Um, but it's a, I mean, it's almost like it's one of these issues that I've never seen. I I've listened to and studied the MMT, and I've never seen the MMT folks convince, I'll call it the conventional wisdom, that they need to change the way they think about money and deficits.
Yeah,
But
I know the problem.
here's the clincher though. Japan has 230% debt to GDP, very low inflation. I don't know whether they're at full employment or not. Slow growing economy, but I would argue that's for a whole bunch of reasons, largely um, demographics. And so the MMT people would say, well, that's proof that big deficits don't matter. And is that
Well,
not
I would say the
compelling?
same thing about I would say the same thing about China. In the last 29 years, they increased their money supply by 5,500%, a factor of 55. We increased ours by a factor of 6 or 600%. So let's say that 600% is normal for what you would create with banks. I mean, because our money supply has increased when people take out loans. So they're close to like a 5,000% increase in their money supply in 29 years. And how did they do it? The People's Bank of China, well, the exporters take their dollars that they receive overseas and they take it to the bank and trade it for yuan. And then the bank um, trades the yuan with the, or sorry, trades the dollars for the yuan, which it prints. So I mean, it says that right in Investopedia that the PBOC prints the dollars that they buy the prints the yuan that they buy the dollars with. And then they keep the dollars. So now they have $4 trillion in US dollar reserves, 3 trillion officially, but then it's assumed there's like another trillion in the banks around the country. So they've got all these dollar reserves that were created just well, anyway, so we could do the same. And but they put the money into like they back the uh, China Development Bank, which is the largest development bank in the world, and
Yeah,
build all this stuff. Well, that's productive. So that increases
right.
GDP. So the reason, and it hasn't been inflationary, like you're saying about Japan.
Yeah,
So if you look at the curves look the same, the GDP curve and the money supply curve. So it balances out. So we could do that as well. But that's not what we do. I mean, let's assume MMT and that the money just went to consumers and they would spend it on whatever they want to spend it on. Uh, it's they're going to drive up asset prices, no doubt. They could spend it on Bitcoin, or so
yeah,
I mean they could spend it on lots of things. Anyway, but you were mentioned. Do you want me to go into the
yeah. No,
night?
we'll come to Bitcoin in a second. I guess. So just remind me. So you're saying that the Chinese money supply grew by a
A
factor of
huge amount. Yeah.
huge multiple of the U.S. And so clearly the growth of but they've also grown their economy and it's been
You
invested abroad. And so
unbelievably.
there's been a lot of productive use of that. The the question that raises in my mind, of course, is, endless growth on a finite planet doesn't work either. So there's got to be some alternative algorithm that ultimately takes over from a exponentially growing productive money supply if that means more cement buildings and more airplanes and more jet fuel.
Yeah, but you could also call productivity research and development. So you can research ways of using
Right,
your resources more efficiently or of
right.
cleaning
So
up
it's
the
not how
oceans,
big
all
we
that kind of
grow, it's
stuff.
how we grow big, to quote Jane Jacobs.
Yeah, yeah, it doesn't have yeah.
Yeah.
We don't yeah.
So let's flip to the final topic. I knew we'd never be able to solve any of these, much less all of these. I guess maybe if I could sort of summarize this section, I don't know how to summarize it. So I think I think I think there's sort of agreement and disagreement or consensus and non-consensus about the 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 seriousness of the deficit problem. I don't think we've resolved that. We've got two cases where um, big federal spending, whether it's through the Treasury or the Federal Reserve, in the case of Japan and China, has led to a non-crisis, very different context, but in either case, a crisis didn't ensue. And in the US, there's a massive alarm now about a deficit crisis. And yet, our Congress just passed a bill that accentuates the problem. And everyone said that we would create a massive crisis in the Treasury market, and that hasn't happened either. So it seems to me we don't really know the answer to the question, what happens if the US government, the primary currency, the dollar being the primary currency in the global economy, we don't know the answer to the question, what happens if we run a massive trade deficit? Because we can't look to other countries and get an answer. And in the experience here, I mean, people have been worrying about the deficit here since I can remember, and we haven't created a run on the dollar yet. So it seems to me it's almost like a question that there isn't an answer to. Is that a fair way to
Well,
summarize this?
it seems to me the problem is the interest, and it actually is. I mean, it's not compound interest because the government always pays when, when the debt comes due, they pay. Like compound interest is when you add the interest to the debt, which doesn't, but it is compound interest in the sense that they don't have the money to buy, to roll over all that debt, and they borrow it. So they borrow more and more to pay the interest and principal. So the interest goes up and up and up. And so it's eating up more and more of our spendable money. And I think that's where the problem is. But I would agree that the government could solve their problem by, I would say, issuing treasury notes, not Federal Reserve um, reserves, because for reasons explained. I mean, either way, you're going to have to change the law because they can't do either one right now under the law.
Yeah.
But in the 19th century, if we go back to that, so first you had the first U.S. bank, second U.S. bank, which were both public banks, and under Hamilton, they were supposed to be productive. The point was infrastructure and development. And then Jackson shut those down, and then you had all these wildcat banks that were, so they're chartered by the states, not colonies, no states, but they're all printing their own banknotes and supposedly backed by gold. And of course, most of them don't have the gold that they purport to have. So you have you have perpetual runs on them, and you can't tell how much these notes are worth. Like apparently they used to have tables where it depended on how far you were from the bank, because you could get there, if there was a
Because
problem.
the run on the bank actually mattered.
Exactly. Yeah. So you couldn't, it's just a chaotic money system. So, and then Lincoln came into power and he had to deal with the Civil War. He was faced with 24 to 36% interest from the bankers who were, British bankers, and which would have put us back into colonialism by debt, basically, under the bankers. So somebody whispered it in his ear and said, you could just issue that money. So he did, issued, issued 450, I forget, 450 million, I think, greenback dollars, and
By
plugged
the
the
Treasury.
hole. Yes, through the Treasury, directly through the Treasury. Obviously, they didn't have a Federal Reserve at that point.
Oh, right. Yeah.
So you could say the functions of the Treasury and the Fed were merged at that time. They hadn't split
Yeah.
yet. And meanwhile, they had to deal with this totally chaotic paper money system. So they passed the National Bank Acts, which required that, the idea was try to get everybody turn all these banks into national banks, and then they could issue national bank notes that would be worth $1 all around the country. I mean, you'd know what they were worth. But if they're going to be backed by the government for $1, they wanted them to deposit with the Treasury the same number of, the same either gold or Treasury debt. So Treasury securities. So basically, they were backing these national bank notes with debt, government debt. And so that was another source of money for the Civil War, to fight the Civil War for the North. But it wasn't enough, and that's why they had to print a bunch of money as well. So, and I would agree, we still have that problem. But so that's what the Genius Act does, is it requires stable coins to be backed 1-to-1 by dollars or gold or Bitcoin. They even allow Bitcoin, but mostly it's debt, federal debt, and it is
Yeah.
projected that by 2030 they'll be the biggest buyer of federal debt,
So
of all.
let's slow down for a second. Let's frame. So we're now going to shift into our third and
Sorry.
juicy topic, which is
Okay, back to you.
crypto. And there's so much more about money that we haven't talked about, including its sort of metaphysical influence on us, and how much control it has over our lives. So this is nowhere near a complete discussion, but there is a lot going on in this whole crypto world that I want to talk about. So we're gonna shift gears again, and
Can I say one more thing that's
yeah, sure.
sorry, there was just interesting about the National Banks Act. So they were trying to get all the banks to become national banks to join the system. But a lot of the state banks didn't want to do it. They didn't do it. And what they figured out was that instead of issuing these paper notes that they were lending out, they just would hand the customer a checkbook and they just wrote the sum in the deposit account. And basically, the customer would write the note, wrote it on the checkbook. And that is that's where most of our money comes from today. That's the source of the system we have where,
That's where the checkbook was invented, basically.
yeah, where you make loans, where the bank makes loans just on they're
Yeah,
just on
covering
their,
our checks, basically.
yeah, they're just
Yeah,
on yeah. Okay, that's all.
yeah.
I just thought that was
Well, let's
interesting.
shift. Yeah, let's shift for a second, and we're not going to be able to do justice to this. It's probably a mistake to try, but I'm just like blown away what's happening with crypto, like most of us. And full disclosure, I was sort of a crypto cynic for a long time. I still am.
I
Um,
too.
and but just a couple of things that I think I understand. One is that Bitcoin is obviously all the rage, but its original use case was to be a decentralized, independent currency to be used for transactions, to avoid the corrupt and abusive, from a fees and whatnot, banking system. And now Bitcoin, the only thing it's not used for is a currency of exchange. It's used almost entirely as a speculative asset. And so the whole purpose of Bitcoin is different, as was stated by the creators, is totally different than what it's being used for, which is just to me an interesting fact. But
Mhm.
what's become closer to, and we'll get back to the good and bad and ugly of the speculative use of Bitcoin. But what's more related to the conversation we've just had is this rise of what are called stable coins, which are just like you described. They're these blockchain-based currencies, so decentralized out of the banking system, and therefore not, until the Genius Act of the United States, not regulated by the financial regulators. But stable coins are all linked now to a hard currency like the US dollar, and are essentially a way to create a a currency linked to the dollar and the stability of the dollar outside the purview of the regulators until the Genius Act. And so what the hell is going on here? The whole point of the crypto invention was to get it outside the regulated banking system. So what's your thought? Tell us what the Genius Act is, and then thought on it.
Yeah, okay. So stable coins were the answer to Bitcoin being so volatile that nobody wanted to use them for a currency because you didn't know what, if you based your contract on it, you didn't know what it was going to be worth a month from now. You didn't know if it was going up or down. So anyway, stable coins are stable because they're backed allegedly 1 to 1 with dollars. And so, I get you could have it in a different currency, but basically they're mostly all dollars. So and mostly like Tether is the biggest of the stable coins, and it's got I don't remember the numbers, but anyway, mostly it's U.S. debt backing the stable coins. Uh, so the reason the Genius Act was passed, or why they want it, is in order to create another source of revenue or purchasers of U.S. debt besides the Chinese and the Japanese, et cetera, who are dumping their bonds, or the Russians, whatever, trying to get around the sanctions and the tariffs, and they want to escape the U.S. system, and so the stablecoin system is already huge. It's bigger than Visa in terms of the amount of
Yeah, I couldn't believe that when you just wrote. Actually, if we can get your piece. I don't know if Tay, you have a copy of it, but Ellen just wrote a piece about this that I just read this morning. So we'll put it on the chat. But one of the things that blew me away is that the amount of transactions in Ether, sorry, Ether in Tether are greater than the number of transactions in Mastercard and Visa combined. Is that accurate?
well, all the stable coins are greater than those.
All of
And
them
I
together.
think Tether alone is greater than Visa. But they're mostly, I mean, they're overseas transactions.
Yeah.
So Visa still has the most, like, for domestic retail trade. But overall, I think I saw Tether is like 3 times what Visa is overall in exchanges. For example, in
Brazil.
Africa.
Yeah.
Yeah, yeah, in these countries that have very unstable currencies, or in Africa, if you want to trade with another African country, you can just convert to a Tether stable coin and then send it to your friend in some other country, and then they can convert it to their currency, whatever. Yeah,
Yeah.
so it's very, very efficient. And I saw that, for example, the Russians were doing it where they to get around the
The
sanctions that
sanctions. Yeah.
yeah, so they'll say they want to sell something to India, and they can, or so the Indians can buy some Tether and buy the whatever it is with Tether, and then the Russians can convert it back into the Russian currency. So it's
But
it's
one of the things though that the Genius Act does is it imposes the same anti-money laundering constraints on the Tether or equivalent um, companies that are doing this, no?
Yeah. So I'm not sure what that does to, I mean, I know that Russia was using Tether I mean, I read that they were using Tether for that. So I don't know what that does,
Yeah.
if that gets around that or not. But apparently the Chinese are talking about creating their own stable coin because they've got this 3 or 4 trillion in dollar reserves. They don't need to be part of the U.S. system. I mean, they don't need to
Yeah.
comply with the rules for U.S. stablecoins because they don't need to borrow U.S. debt on the U.S. debt market. They've already got it. They've got a lot of
Right.
reserves,
Right.
and then they can use that money to back loans all over like the Belt and Road Initiative, et cetera. They were doing that anyway. They were using dollars. They were lending dollars in the Belt and Road Initiative, but they were doing it through the Eurodollar system, which is the same thing, basically. They have a lot of dollars, so they can back use that to back loans without actually spending the dollars. They
Yeah.
use them for reserves. Yeah.
But those reserves are sitting there, you know, docile. They're essentially leveraging an asset they already have
Yeah.
and essentially creating their own, and in the case of China, not so many central bank, US dollar central bank out of their reserves. And I'm struggling to figure out whether I think that's a good thing, a bad thing, or it doesn't matter. But I want to go back to one thing you said. You said that the reason the Treasury was in favor, because you got to wonder in our government now what their motivations are. And one of the things that you wrote is that what's his name, Treasury Secretary Bessent,
That's
is saying this is essentially a way to create more demand for treasuries. And I got a problem, which is I need to sell a ton load of treasuries. So I'm in favor of this because it's going to create demand for treasuries. Do I have that right?
Yeah, exactly. So it's going to plug a hole in the treasury market. So it's one reason that the treasury market's not going to fail. So
Yeah.
you don't have to worry about that particular aspect of the debt. To me, the bigger aspect is the interest. It's certainly not going to solve the interest problem. It's going to drive up the interest because there's going to be even more
Just
stable
make it
coin.
easier to sell more debt.
Yeah, it's a
Yeah,
really
it's
good.
interesting. There's another regulation that I don't know where this stands, but that the Treasury, one of the reasons the banks have been supportive of Trump is that they've promised to ease up on some regulation on their liquidity, their ability to essentially hold lots of treasuries and run the carry trade against the repo market, which has moved into hedge funds. And so, for the same reason, Bassett is in favor of easing this regulation because the banks will then become buyers of treasuries again, whereas right now they're quite constrained in how many treasuries they can hold because of the capital requirements. So it's kind of like if that's true, and it makes sense to me, and a friend of mine that works in is on the board of a big bank pretty much confirmed that. The banks, it's a classic case. The banks see near-term money to be made doing this arbitrage trade that has moved into the big hedge funds. And so they're in favor of the Trump administration just because of that one benefit alone. Um, and maybe
Yeah,
this
there's
Genius Act is another extension of that.
yeah, they get another benefit under the Genius Act that you have to be either a bank or an approved non-bank. So basically, you have to get licensed. I mean, you have to get approved in order to pay interest on your deposits that you get from your stable coins. So the non-banks that well, so Tether, let's say that I don't know if they're going to try to qualify, but if they right now they keep the interest. So it's a huge moneymaker for
Yeah.
Tether. Has been incredibly profitable, and they don't have to do much work. I mean, once you've got your computer program set up, the computer just does all the work, and you just sit there and suck in all that interest off the federal debt. But supposedly it's an advantage to the banks or the approved non-banks that they get to pay interest and therefore people will use their stable coins because they'll get some interest on them instead of Tether or some
Yeah.
overseas one that doesn't qualify. But it seems to me it's a great advantage for the overseas issuer because they get to keep the interest.
Yeah, I mean, that just seems like that's free money that there's no such thing as free money. I mean, this is just like, anyone who has liquidity and has the opportunity to invest it is just a matter of time before they screw that up through greed. That's why we have to regulate the banking system. And, I don't know who's looking at Tether's asset and liability books, but we've had plenty of bank failures with banks sitting on a lot of liquidity and investing it in ways that end up blowing themselves up. But now that it's sort of been embraced in it's been given the blessing of it being quote regulated. and now the banks are going to be doing it. We've essentially, it's kind of ironic, isn't it? We've had the kind of extreme libertarian get me away from the government has now created an entire industry outside the government, and now they're kind of backdoor coming in for government, blessing, so that they can expand it exponentially bigger than it is than they probably could without the government blessing, even though the government blessing is very different than a guarantee.
Yeah. Well, and the banks want to do it because it really is a much more efficient system than Swift, for example.
Well,
Instead
that's the
of,
key. So the technology is better.
yeah, they want the
Blockchain
technology.
technology is better, but why can't the banks just build a blockchain Swift?
Yeah, good idea. I don't know. But I mean, JP Morgan apparently already has their own stable coin,
Do they?
and
Yeah.
therefore they can trade overseas, instantly, all that
Yeah.
stuff. Yeah.
Oh, well. Well, last question before we bring everyone else in. I'm sure we got lots of insight in the group here because it's a very smart group. And so I'm keen to bring them into the conversation. But I think we all sort of feel in our bones that the whole financial system, the money system, the debt system, the trade system, it just feels rickety. And there isn't anyone screaming from the mountaintop or the building top about the pending mortgage crisis or the this crisis or the that crisis, other than maybe the debt crisis. But it certainly doesn't feel stable and resilient. It seems out of control. And so I'm just curious if you would dare to predict where you think the big next crisis might come from.
Well, I would think the derivatives crisis, I mean, you think it's not as bad as it looks, but something will trigger the derivatives crisis. And then they'll do the great taking thing, which means they'll take everything. Even your, sorry, I lost you. Even your stocks. Somehow I hit my.
You're still here. We're still here.
Yeah, okay. Like they'll even take your stocks because all your stocks are in the name of the seed and company, which is the nominee of the FTCC. Like we don't own our stocks. We just have a contract, that's we have a contract with our broker to have this to get the stock, and the broker has a contract with the FTCC, and all the stock is actually in this pool. And because it's in that pool, therefore they can borrow it for short selling and they don't have to ask your approval and all that kind of stuff. You could put all that on a blockchain and you would have ownership of your own stock. And you could put,
Mm.
I mean, that was the idea of a CBDC, but everybody's so outraged over the whole idea of a CBDC that apparently that's not going to pass. But they've done it in other, like they did it in Brazil, and it's very popular because it's very
A
convenient.
central bank digital currency, CBDC.
Yeah, for the people. So it's basically we now banks have an account with the Fed, and it's very convenient for them. They could just move money from one, between banks, and it's very
Mm.
fast and all that stuff. But we don't have that benefit. We don't have an account with the Fed. We're not getting interest on, our
Mm.
deposits and all that kind of stuff from the Fed. So in Brazil, the individuals can have an account with the Fed, and I forget the number. It's like over 90% of Brazilian adults are using that system because it's just
Mm.
very convenient. You can trade person to person, all that kind of stuff. Whereas only 2% of Americans use cryptocurrency for
Yeah.
actual trade.
Because
So
we have
anyway,
such a better financial system than they have in Brazil, I would argue,
allegedly.
allegedly. So, but you think that the something linked to this, the $1 trillion of derivatives is where we should be
Well, I
concerned.
would just be afraid of it going to, I mean, if some big banks go, I wrote an article once about the China could short JP Morgan and bring it down. I mean, it was short sellers that brought down Silicon Valley Bank originally. They brought down the stock, and then the depositors were spread this
Yeah,
rumor through
it
social
triggered it.
media
Yeah.
that, yeah. So, but it was the short sellers that started it. So China could short sell JP Morgan.
Well, but
They've got
remember
it.
the short sellers started it because there was a good reason to, because they had this massive asset and liability mismatch that was losing money. So
Yeah, well, that's true. But I mean, the Chinese can do it just because they want to crash JP Morgan. They can do it. Um, and that would certainly bring down that would bring down the derivatives bubble, I would think, would
yeah.
pierce, and then
Well, if
that would,
Morgan went bankrupt, that would be a problem for the derivatives market, that's for sure.
yeah.
Well,
So that,
uh I'm less concerned about the derivatives thing in part because so much of those notional amounts are now in clearinghouses. I think it's fair to be concerned about the clearinghouses, and I'm not. I haven't looked at them. So, but provided those clearinghouses are well capitalized, the risk of those massive notionals is to
I
me,
think it's the FDCC. It's the same thing. I mean, I saw a chart. That's where they put it. So
yeah.
I don't trust the FDCC.
Well, that's fair. Yeah. I tell you what I'm just literally mind blown by is what's going on in Bitcoin, and in particular with this new Bitcoin treasury strategy that this guy Michael Saylor has.
That
Uh,
could be a serious problem. I mean, I just saw a video on that he could
oh,
that could
this
crash the whole system
this
because
guy is,
it's a Ponzi scheme by definition. Like
yeah,
he's taking in money and using it to borrow. So he's
yeah,
increasing the debt, buying more Bitcoin. It's a Ponzi scheme.
yeah,
And if the price of Bitcoin goes the other way, if it drops, I mean, it's all based on the idea that Bitcoin will never drop. But
exactly.
what if it does? What if it goes back? What if it drops by half like it did
Right.
before?
Yeah.
Yeah. So I
What
agree.
if it
Okay,
drops
I'll
by
agree with you.
90%? Yeah.
But so that would bring down the derivative market as well, it seems to me.
Well, so I don't know. Today I don't think it would, but what I worry about with this Genius Act, and frankly, it started when Black um BlackRock created an ETF on Bitcoin. Bitcoin has increasingly normalized its way into the mainstream financial system. And so now you've got, lots of people with exposure to Bitcoin that wasn't the case before. And it is I don't know if it's a Ponzi scheme, it's certainly a scam and that this guy's running, but on a scale that no one's ever seen before. This is, you know, the company is worth, I think, $100 billion or something like that now. I mean, it's crazy large scale and continuing. And just to say, now the president of the United States is in on the scam. And so you've got this convergence of the libertarians, what started as libertarian, kind of creeping back inside the government security blanket with the endorsement of the president of the United States. And by the way, the Commerce Secretary is running the same trade out of the business that his family controls. And so you've got kind of like a closed loop corruption scheme that's the biggest scam that I've ever seen in my life. And it could go on for months and years, or it could end tomorrow. And the more that it's integrated into the mainstream financial system, the bigger the risks of a surprise happening inside a JP Morgan or inside a BlackRock or wherever. So that would be my
Yeah,
sort of
okay,
alarm
I'll
today.
agree. I'll agree with you that that is a huge risk. And it seems to me if you talk about regenerative, it's just not fair because most people don't have Bitcoin and you're letting people make a huge amount of money just because it's a bet. It was clearly a bet in the first place.
Yeah.
And yeah. I mean, you could say, well, you could have bought it. You were there. You knew what the price was. I mean, I could have bought it, but I didn't. But yeah,
I've
but
never owned any cryptocurrency. And by the way, this also doesn't do justice to all of the good uses of cryptocurrencies as complementary currencies, the way Bernard Lietaer had always envisioned. That's getting
yeah.
completely overwhelmed by the speculative nonsense. So